Hello, everyone. I'm Baba Amro Selassie, the head of IMF's African department. Welcoming you to Africa Perspectives, where we discuss pressing economic policy issues faced by regional leaders. Today, we're very honored to have Professor Michael Kremer. With deep connection and affection for Africa, Professor Kremer began his academic journey as a volunteer teacher in Kenya. This inspired the field experiments and innovative approaches that would eventually earn him the 2019 Nobel Prize for Economics. The breadth of policy challenges that Michael has worked on and the insightful proposals he has come up with are difficult to do justice in a brief introduction like this. In fact, it's hard to think of anybody in academia or elsewhere that has made such a big contribution to the well-being of millions of people around the world. One example is his work on advanced market commitment for a pneumococcal vaccine, which has saved an estimated 700,000 lives. He advised on accelerating COVID-19 vaccination and co-founded USAID's Development Innovation Ventures and Precision Agriculture for Development, which leverages digital technology to improve productivity and incomes for small farmers. And he recently co-launched, actually here at IMF, the Market Shaping Accelerator, which aims at closing the gap between social and private returns to innovation. Among Professor Kremer's many responsibilities, he currently leads the Development Innovation Lab at the University of Chicago. Professor Kremer, welcome.
Thank you so much for that very kind introduction.
Really honored to have you here. Jumping straight into a few questions we have for you. You've written a huge range of policy issues that inform policymakers and institutions like ours on how development can be made more inclusive. Before we go deeper into some of the issues, I would like to hear from you about what you consider the main macroeconomic policy implications of your research that policymakers might focus on.
Well, I think the biggest macroeconomic shock that we've experienced in some time has been the COVID-19 pandemic. And a conservative estimate of the global cost of the pandemic, including direct GDP costs, education losses, and deaths, is in the tens of trillions of dollars. Also note that based on historical data, the annual risk of a pandemic is estimated at 2%. So I don't think we should be thinking of this as an event in the past. We should be thinking about this as an important risk for the future as well. And shocks like that obviously have big consequences for conventional macro measures. So there were huge fiscal responses following COVID-19. Global government debt increased by 13 percentage points relative to GDP. There are also threats to the international trading system, threats that we're still facing today. There were bans on exports of vaccines and inputs into vaccines. There's hoarding. There were, at least briefly, problems with supply chains for personal protective equipment. Just to continue on this theme, I'll come back to pandemics, but when we saw the food price shock, we also saw disruptions to trade, and I think these can have very negative consequences for low and middle income economies, where trade's very important. Now, there are some things that we can do to address some of these risks. Obviously, we can't eliminate them, but we can take some steps. And I don't think the amount that we're spending is anywhere near sufficient or commensurate with the size of the shocks that we're facing. Rachel Glenister, Chris Snyder, and the IMF's Brendan Tan have a recent paper in which they take this approximately 2% annual chance of a pandemic. They multiply that times the expected cost if one occurs to derive the annual expected cost of a pandemic. So not the cost if one occurs, but in expectation, how much are we paying each year? And they come up with $915 billion. So if you think about the cost of some steps to reduce either the chance of a pandemic or the severity of a pandemic, they're a tiny fraction of the cost. For example, advance investments in vaccine capacity. Work we did during the previous pandemic indicated that having a large supply was critical, a lot of capacity, was critical, not just, first it's critical because the faster you can roll out vaccines, the faster you can slow the, or in some cases eliminate the progress of the pandemic. And a point which I don't think is sufficiently recognized is that having a lot of capacity at the global level is very important for equity as well. One way to see this is if it's going to take 2 years to vaccinate the world, then the countries that are last in line are going to be at the end of that 2 years. If you doubled the capacity, or let's say quadrupled the capacity, so this could be done in 6 months. For the person who's a month in to the queue, you save a quarter of that a week. For the person who's 2 years in at the end of the queue, well, you save a year and a half. So having more capacity will really boost equity as well. But there are many other things that could be done. For example, there are a number of technological investments that we could be making now, like developing a universal coronavirus vaccine, or just figuring out better personal protective equipment and investing in capacity to manufacture that quickly if needed, or stockpiling it in some cases. There's a lot that we could be doing to ameliorate these risks, and just as we worry about stability of banking systems, and that's key to macro stability, trying to invest in being able to reduce the chance of the next pandemic and then help ameliorate its consequences when it comes, I think should be a macroeconomic priority.
So one of the things that happened on the pandemic, as we know, is, of course, African countries, for the most part, were at the back of the queue for getting access to vaccines. That has led to quite a lot of work to try and strengthen vaccine capacity. But what the pandemic also showed was kind of, the lack of flow of, or the controls on intellectual property type issues were the major constraint rather than the physical capacity. How might we get around that? Because I think that will also be the main barrier next time around, not getting the technology, not getting the know-how quickly enough to build whatever vaccines we're going to need the next time.
I think the world needs two things. One, it needs new technologies for health, including for pandemics. We've seen just tremendous improvements in health worldwide. And lifespan today in low-income countries is far higher than lifespan was at a similar level of GDP in high-income countries, because technology is advanced, and that includes many technologies which are really available and can be used in low and middle-income countries, vaccines, antibiotics. So we need the new technology, but of course we need to make that technology actually available to people, and we need access. Right now, the main system for encouraging the development of technology, or I don't want to say the main, but a very important one, is intellectual property. And that's providing a temporary monopoly in exchange for developing a new product. As long as the discussions are restricted to, do we strengthen or weaken intellectual property, we're fundamentally in a debate between, do we want more R&D incentives or do we want more access? Mm-hmm. Mm-hmm. That's a terrible debate to be in. We clearly need both. And we should just think about broadening our range of instruments. So you mentioned advanced market commitments. This is an area in which I'd worked, and maybe I can explain a little bit more about the advanced market commitment for pneumococcus, which I think can serve as a model, and that approach could be used in not all, but some additional situations. So there was a vaccine for the strains of pneumococcus common in high-income countries, but there are different strains common in low and middle-income countries. And a group of donors came together and committed that they would make $1.2 billion available if vaccines that were effective against those strains were developed, and if countries wanted to make at least some payment to cover the cost of those vaccines. Following that commitment, 3 vaccines against the strains of pneumococcus common in low and middle income countries have been developed. Hundreds of millions of doses have been delivered, and as you mentioned, an estimated 700,000 lives have been saved thanks to those vaccines. I won't necessarily say thanks to the advanced market commitment. We don't know for sure what would have happened in the absence of the advanced market commitment, but there's certainly reason to think that this speeded up the rollout of the vaccines considerably if we compare it to other vaccines where there wasn't an advanced market commitment. So there the idea was that there's a commitment to help finance the purchase. That provides the incentive to do the R&D. What do the donors ask for in exchange? Well, they ask for sufficient supply to serve the market, including people in low-income countries who ordinarily, unfortunately, were not getting vaccines for decades sometimes after they were developed, and for a commitment on the pricing. The vaccine companies had to agree to a price for this deal, and they had to agree to maintain that price after the end of the program, so that they would continue to be available. And one can always debate the price that was decided on in the program. I don't want to claim that everything was perfect in this pneumococcus advanced market commitment, but I think it provides proof of concept for the idea that instead of incentivizing research with just a promise of temporary monopoly rights, we can incentivize research with the commitment to not have a small quantity at a high price, which is what is typical with monopoly, but rather a large quantity with a somewhat lower price, and that can actually, there are not many free lunches in economics, but that can have just as strong research incentives while broadening access.
Thank you, Michael. Very helpful. You wanted to mention, I guess, an analogous on climate also.
Oh, yes.
How important it is.
Yes. Thanks very much. Yeah. So, climate change is obviously a long-term threat to the world economy, but I also think that it's very important for the types of crises high, fast-moving crises that the IMF deals with all the time. And again, there may be policy things that the IMF either the IMF or others in the international system could help address. So, with climate change comes increased variability of rainfall, more extreme heat events. For countries with a large agricultural sector, these are very real macro shocks. And again, these have systemic effects that go beyond just a uniform loss of income across the population. So let me actually note that the recent food price spike, there's a lot of attention. Often in the popular press, people talked about that as a result of the Ukraine war. I don't mean to diminish the importance of that. That was a contributing factor. But another very important factor, and one that some people argue was quantitatively more important, was extreme weather events in North America that really affected, for example, Canadian exports of wheat. And so we've had another real, very recent example of how these global crises can turn into macro shocks that again threaten the international trade system as countries put export bans in place for food, aggravating the situation for the remaining parts of the world. Now, I'd like to mention 2 recent papers by Ted Miguel. One, entitled Warming Increases the Risk of Civil War in Africa, finds strong historical linkages between civil war and temperature in Africa. And they find that warmer years lead to significant increases in the likelihood of war. A second paper, a more recent paper, is entitled General Equilibrium Effects of Cash Transfers, Experimental Evidence from Kenya. So what that paper finds, it examined a program that provided unconditional cash transfers, and these were to individuals. They're fairly large. This was done by an NGO, Give Directly, and the way this program was structured as part of they were interested in, we had plenty of evidence on the effects on individual households from receiving these transfers, generally very positive findings. But there was a question of were there general equilibrium effects? And so they organized this. Some villages had the program, other villages didn't. The transfers were about a 15% shock to GDP. But they found huge benefits to non-recipients of the program and estimated GDP multiplier, a local GDP multiplier of 2.4. Now, look, that's much bigger than I would have guessed. It was, at a recent macro conference, talking to participants. There was limited evidence on the channels. The authors argue with some evidence that there's a lot of unused capacity. So somebody who's repairing bicycle tires, they might be sitting around most of the day, and if they have 10 customers instead of 2, their productivity goes up a lot. So there's some possible channels, but clearly more research is needed. But when we know that climate shocks, or extreme weather shocks, can have these terrible consequences, when there's evidence that there might be local multiplier effects like this, that seems of potential macroeconomic importance. And again, with some investments now, we could put in place systems that could potentially address this. So if there were, many countries have national ID systems, countries that don't could put them in place. India did this with the Aadhaar system. Yeah. Mobile phones are becoming very widespread. Mobile money is becoming very widespread. By doing some advanced work to set up a system, there are early warning systems for famines, there's satellite data on crops. One could put in place a system so that as soon as these crises hit, cash transfers could go out, maybe not at the Give Directly level, those were very large, but some cash transfers went out to affected people. And that could not only help mitigate some of these risks of conflict, not only potentially create these GDP multiplier effects, but I think even from a very narrow point of view of donors that are worried about crises and needing to cover humanitarian expenditures or deal with migration issues, this is something that some prevention could help address things that are very expensive to cure once they've happened. Now I know the IMF is, obviously these shocks will have occur at the level of a country, so it makes sense for the country to have some insurance. I know the IMF is working on such issues. There probably needs to be some concessional component as well to make these more attractive for countries to take up. My understanding is not many countries are buying into these services, but perhaps with a larger concessional element, they would be willing to do so. I actually don't know how they're structured, by the way. If you're buying 10 years of insurance, that's beyond the political window for the administration in power. But perhaps an administration early in its just after an election might be willing to buy this insurance up through the date of the next election.
I think in terms of that work, we're still in the very, very early stages of that. So I cannot think of any country, certainly not in sub-Saharan Africa, where they've been experimenting with this. But you touch on something. I mean, I wanted to have two follow-up questions to this fascinating perspective.
Wonderful.
So one is, I'm putting myself in the position of a minister of finance in the region, and of course they're subject to a lot of ideas, a lot of brilliant examples of the right interventions to make. But the challenge they often face is not having enough money, of course, to do all of them. But more generally, kind of, so at times like that, question that often we end up discussing or keeps coming up is, do you want to focus the limited resources you have on, a lot of the interventions that you're pointing out are about how to make people's lives better now, versus, of course, for both political economy reasons, but also practical reasons, large investments on infrastructure like electricity, roads. And the lack of resources often means that governments have to make a trade-off. Now, the humanist in all of us, of course, wants to see more attention being paid to social protection, particularly now in the wake of the pandemic, when poverty's gone up, when we had Ted Miguel here, and the horrifying learning losses, scarring that is happening because of the pandemic. So right now, I think that would make more sense. But that's trade-off between more social protection, more investment on social sectors versus hard infrastructure remains an issue that our leaders bring up. How would you go about thinking about this challenge?
So certainly budgets are tight. Some of these challenges are directly due to climate change. And climate change was not a problem that was made in Africa. That was, or in low-income countries more, in general. This was a problem that was made in high-income countries. And there's a lot of interest in mitigation, and we certainly need mitigation. We also need adaptation, and some of that adaptation, or a lot of that adaptation, in my view, should be funded by high-income countries that created this problem. So I mentioned one area, which was social protection, cash transfers in the middle of a crisis. I think I realize there are limited budgets, but I think in the most extreme circumstances, those can be very valuable. But I'd like to highlight another category, which is productive social sector investments. I think that's a very important category where that are both investments in the future and are addressing what used to be called basic human needs. I don't know what this is called anymore. I guess I'm old enough now. And that can include health investments. You mentioned Ted Miguel. We've done work on the long-run impact of health investments, suggesting substantial gains in income associated with health investments and childhood health investments that would, in fact, we've estimated the tax revenue that governments would collect from the later income is sufficient that if they went out and borrowed and to pay for these health investments, and the tax revenue would be enough to repay the borrowing with interest. And obviously, that's just the tax revenue. The citizens would be much better off. That's an extreme example. I'm not going to claim that happens everywhere. I also think we need to make our social sector investments wisely, and there are lots of bad investments one can make. But there's some very high productivity investments. There's other, within education, I think we could also do much better. These are, if we do proper national income accounting, taking into account the value of people's time, health and education account for a huge share of investment, and we should be paying just as much attention to the quality of that investment as we are to the quality of other types of investment.
I couldn't agree more. Particularly, education investment is something very dear to my heart, and benefited from as a result of investments my parents made in me. But just one follow-up question, and then I think we need to advance.
Sure.
Question. But so one of the really depressing things for me has been that, despite all of the development gains on health, on education, on infant mortality, the appetite to support development, financing ODA budgets, as you know, are declining, including through the pandemic. There was a bit of a spike in 2020, but the trend decline has continued. Of course, understandably, because advanced countries' balance sheets have also been impacted by the pandemic. But I just worry that we're at a point where we're not making, despite all of the gains as a result of positive interventions, the appetite to fund this from the outside world is just not there. And coming as it's doing in the middle of a difficult global environment for many African countries and others, it really is going to take quite a toll.
I certainly agree that, and I think that in the long run, what's going to matter most is the policies of countries themselves. But I think, we were just discussing climate, but more broadly, I think there's a moral obligation to both to address the impact of climate change, or help address the impact of climate change, and more broadly, when in these most dire situations, or where there's opportunities for kids to get educated who wouldn't be educated otherwise. I think the world should come together for this, and it's unfortunate that these trends you're mentioning are unfortunate.
Thanks. Turning to the market shaping accelerator, which you co-launched here at the fund a little while ago, I understand that it aims at harnessing the creativity of the private sector to try and close the gap between social and private value of investment. Do you, or how do you expect this market-shaping accelerator to help in developing countries? Of course, my bailiwick in particular.
Right. As you note, the market-shaping accelerator, in some ways, it builds on the experience of the pneumococcus advanced market commitment for vaccines, and on the COVID experience. It's about using the tools of economics to help think through questions of incentivizing research and development, and we're focusing on public goods. Public goods around pandemics and public goods around climate. And there, in each case, there are huge, anytime you're talking about research and development, you're out of from an economics point of view, you're out of a first best world. And we need to think about public policy instruments, including intellectual property rights, of course, is such a public policy instrument, and it was not used to encourage R&D initially, and it was developed and refined. Peer review, similarly, was created and developed, and is still being refined today. But I think we can think about a broader range of market-shaping instruments, and I'll give you an example. Let me start with a high-income country example. Cement and concrete accounts for 7% of global warming emissions. Now, there's a number of technologies that are being worked on. This could involve designing structures and with less concrete, but there are other solutions as well. Different manufacturing processes. This is just one of the ideas out there, but you could use a different rock than is normally being used, and that could reduce the emissions tremendously. When limestone is used, there's a chemical reaction that releases these gases. But right now, the incentives to use that for a typical purchaser of cement is not very high. Well, who is the typical purchaser of cement? Well, actually, the typical purchaser of cement, 49% of cement in the US is bought by the government. A lot of roads, bridges, etc. So in the US, we have an official social cost of carbon, and that gets taken into account in cost-benefit decisions about whether to undertake a project. Imagine we changed our procurement rules so that when thinking about how to procure a project and evaluating various bids, we incorporated that same social cost of carbon. Well, if that rule change was made now, if that was announced, then presumably it'd be much easier for companies that are trying to invest in alternative processes for producing cement to get financing. You know, startups would be able to get investment. Maybe some of the big companies would start thinking about what they could do as well. That's a fairly simple, nothing simple, well, it's relative to dealing with global warming. This is relatively simple change that could be made. And it's not just a matter of the US, obviously. This could be done in other high-income countries, and it could be done in rapidly growing middle-income countries that are going to be purchasing a lot of cement and building new cement plants. You know, we have some stranded capital that might make it slow might make it transition slow in some high-income countries, but because the cement factories are built right next to limestone deposits. And if you're using a different rock, you might locate your cement factory somewhere else. Well, that's something that could relatively cheaply be done if you've got to build a bunch of new cement factories.
Fascinating, fascinating, and you're absolutely right. I mean, like this reminds me a little bit of what Professor Mariana Mazzucotto has also been arguing about how government procurement is such an important tool for influencing markets.
Right, and one thing I'll note, there may be, there are differing opinions about using government procurement in industrial policy. Yeah. The particular alternative that I just mentioned, that's quite neutral in technologies. It doesn't make a judgment of which technical approach to getting greener cement is going to work, or indeed that any of them will work. These building in the social cost of carbon into procurement decisions, that's statically optimal. Even without any dynamic benefits, without any learning by doing, I think it would also generate some more investment in the sector, but it doesn't involve any attempt at picking winners. So there may be times when we do want to pick winners. I'll leave that to others to weigh in on.
Turning to perhaps both our favorite countries, or one of our favorite countries, Kenya. Mm-hmm. I was in Nairobi last week, actually, and couldn't help but think about your seminal paper, The O-Ring Theory of Economic Development. And an important insight in the paper is 1993 paper, aging us a little bit, is the impact of the skills gap between rich and poor countries. That it can have on income gaps and leads to production and economic stratification. As you put it, if strategic complementarity is sufficiently strong, microeconomically identical nations or groups within nations could settle into equilibria with different levels of human capital. Now, my sense is that the human capital gap between Kenya in the 90s versus now, relative to the frontier, really has closed quite a bit, but not the income productivity gap. First, is this something that you also perceive? And then second, what might explain what might explain this?
So, first, there's certainly been a lot of growth in human capital as measured by years of education, and I think that's fantastic. It's another issue that I think is very important to think about is the quality of human capital. And I think Kenya's probably doing better than a lot of countries in this area, But in general, low-income countries have very low learning levels on international assessments, and many low-income countries don't take these international assessments. But when you make attempts at conversion, or if there are surveys like the ASHA surveys, the ASER surveys rather, they suggest that there are very important challenges there. Now, I also think we've been learning a lot about how to improve the quality of education. And there are techniques for foundational literacy and numeracy. There are approaches to trying to ensure, and this is all the more important following the COVID pandemic, that teaching is being targeted to where the students are. The first step is to understand what students already know, and then help them move on to the next topic. If there's a mismatch between where students are being taught and where they are, it's going to be very difficult for students to learn. So we know much more than we knew before about ways to improve the quality of learning, and I think that's going to be a very it's widespread consensus among education experts that that's going to be a very important challenge moving forward. But it's one where I think we can make a lot of progress. Okay. One other thing I would note is that certainly many education experts believe in the idea of dynamic complementarity, as articulated by Heckman, which is that there may be complementarity between investments at the preschool level and later investments in primary school and secondary school. And preschool is an area, at primary school and secondary level, institutions are in place, and they may be, in some cases, difficult to change. That doesn't, I think we should still invest in improving quality, and there's a lot that can be done. But at preschool, institutions are quite open and fluid, but decisions will be made now that may influence the trajectory going forward. And certainly there's evidence that well-executed preschool programs can be implemented by people with secondary education, and now there's plenty of people with secondary education in Africa, and even in relatively low-income areas, not just in Kenya, but in lower-income countries in Kenya. And so setting up systems to ensure that that pre-primary education is in place may in fact be a very good to go back to the trade-offs that you talked about, that might be the best way of increasing GDP in the long run. We will need, of course, to make the complementary investments at the primary and secondary and tertiary level.
Later, yeah. I think you're touching on also something that came up in a paper of yours on the education outcomes in private schools in Kenya, how using standardized education tools, providing teachers with detailed and structured lessons, helped improve education outcomes greatly. Yeah? So one question, I think this is more also applicable to other RCTs. Like, how applicable is this in the public school setting, and how scalable is it also beyond places like Kenya to other countries?
Right. So the particular program that we examined was in private schools, and there was a private company that was running, at the time, running 400 private schools in Kenya. They employed a method that involved very detailed lesson plans. Teachers would get very detailed lesson plans, actually on tablet computers. There'd be lots of support for teachers, visits to teachers' classrooms by the heads of the schools, feedback sessions. This led to gains. So we conducted a randomized trial. Basically, there was a scholarship program to award scholarships to attend these schools. That was oversubscribed, so there was a lottery. We took advantage of that to measure the impact. We estimated gains so that after 2 years of this type of education, students gained an additional 0.9 years of learning. So 2.9 years of learning in 2 years. And at the pre-primary level, it was even larger. 3.5 years of learning in 2 years. So huge gains. You asked the question, could this be applicable in public schools, which I think is a great question. I'll note that the government of Kenya had programs called Tayari Tusome during this period, and those, the best evidence is those also, they weren't in any way identical, but they also had quite detailed lesson plans, support for teachers, a set of ingredients that there's worldwide evidence can make an impact. And certainly there were gains in public schools in Kenya from these programs. Quite substantial gains. And in terms of the potential impact elsewhere, I think it would be great to learn more about this. The particular company whose schools I helped evaluate, they're working in Nigeria with public sector. They've really changed their whole business strategy. They used to run private schools. That they've switched, and they're now mainly working with the public sector. I think it'll be really important to evaluate those efforts, but also to evaluate other efforts at foundational literacy and numeracy using some of these approaches. And I think the international evidence suggests, including from the United States, where there's a lot of studies of something called direct instruction, which has some similarities. The international evidence, I think, is quite promising on this.
Thanks. Penultimate question. Much of your work is based on field experiments like this, using control and treatment groups, of course. At the fund, of course, we are dealing with macro policy issues where such experimentation is difficult. What would you advise us in terms of how we approach kind of these biggish macro policy questions that we deal with? I don't know, like usually, typically it's about, what the right balance to strike is between adjustment and financing when a country is confronted with exogenous shocks or a difficult adjustment period. Any thoughts you have in terms of how we may think through these issues?
I think the micro evidence does provide guidance. You raise this question of how to adjust to imbalances, and there's a lot of micro evidence now. In general, some types of social sector expenditures can be extraordinarily cost effective. Other expenditures, there have been tests and they haven't necessarily found to be effective. Obviously, this is going to be a national decision about how exactly to make the adjustments, and many things will need to be taken into account beyond the evidence. But I think that setting up a process so that when either in good times, when there's potential to expand social sector investment or agricultural investment, or investment in small and medium enterprises, if there's a way to set up a process so that evidence is on the table and policymakers can consider it, I think that would be very valuable. And then in the difficult times when adjustments have to be made, it's also important for that evidence to be out there. I think that there are many questions, of course, where randomized trials are not feasible. If we're thinking about central bank independence or many other questions, and there, we should use the best evidence that's available, whether that's and we should use economic theory, of course, as well, general principles of economics. I do think that there's increasingly in fields like trade or even political economy, there's a lot of excellent work being done, and including efforts with better identification to address some of these issues that are not possible to get at using randomized trials. One other thing I would mention is that there are cases in which randomized trials, this isn't going to help in the middle of a crisis. What do you do next week? But but there are randomized trials, I think, are increasingly shedding light on macro issues. So, for example, I'll reference some work on labor. This is actually work largely in South Asia, but it may have an applicability in Africa as well. We think of a lot of nominal wage stickiness, for example, as something that is associated with high-income countries and labor unions, or long-term wage setting. Well, it turns out that there's a lot of wage stickiness in village economies as well. And excellent work by Supri Kar and others suggesting that there are social norms about wage setting in villages, and those can be very powerful. And if those are in place, then maybe we need to think about wage stickiness even in settings without sort of formal sector labor market institutions that we traditionally think about them in.
The perception of there being a big labor surplus in developing countries, I think, is definitely one that has to be, thought about again. Huh?
I'm not sure how to respond exactly to that question, because you could also think of these other results of the apparent slack in the economies in these village economies generating multipliers as suggesting maybe there was some unused capacity there. But clearly, in both these cases, these are randomized trials that are shedding light on macro issues. I don't think we have a complete picture yet, but I think we should integrate I think a lot of people have been concerned that the increasing use of the experimental approach in randomized trials meant economists weren't working on some types of academic economists weren't working or devoting as much attention to macro questions. And what I think we're starting to see now is people doing at some level, micro foundations of macro, but in a somewhat different way than had been talked about in an earlier generation.
That's a thought that was coming to mind. So perhaps, the last question, maybe the biggest one. I have to, of course, say, I want to pick your brain a little bit on the whole demographic transition that's taking place in sub-Saharan Africa, which I think will shape one way or another the current century. Yeah? Mm-hmm. So I think, if I remember correctly, you did a paper with Marcos Shimon on whether we're going to end up with a bimodal or unimodal distribution of income, depending on this race between demographic, how quickly Africa's population was going and how quickly China is going to be moving up the technology ladder. I mean, that's, of course, some while ago, this paper. But, I would love to hear your thoughts on, one, I mean, I tend to think that demographics has had a big influence on what's been happening in Africa and will continue to exert quite a bit of influence going forward. And then second, what it means in a more global setting. Just simply the numbers are staggering, no? In terms of how many, one number that I like to cite is over the next 10 years, I think half of the new labor market entrants into the global labor market will come from sub-Saharan Africa. So any thoughts you have on that?
I agree. Africa is increasingly going to be important in the world economy, and I think that's a reason why certain policymakers may have thought of Africa as separate from the rest of the world economy. That's not the right attitude to have. To say a bit about this paper with Marcos Shimon, as countries reach a certain level of development, their product mix changes. So low-income countries are often competing with each other as they try to export the same things, for example. High-income countries are importing goods from low-income countries. If we go back in China's development, or even earlier, go back in Korea's development, there's a time when they were producing fairly basic goods and exporting them to high-income countries. And as the incomes grew, first in Korea, now in China, moving into increasingly sophisticated products. And eventually, China's going to, I mean, China's already demanding a lot of commodities, but eventually China's going to be demanding a lot of textiles, and they won't all be made in China, and they'll be, they'll be exported from Ethiopia or Kenya or Ghana. That's going to create a huge opportunity for countries that are right now lower income than China. But there is, you referred to that paper talking about a race between growth of countries that are going to start demanding products from lower income countries and population in lower income countries. And if there's only room for certain population to go into these export industries, then that's going to make it harder and harder as the population of low-income countries grows. So I think we could see, a scenario in which there's very rapid, and our model suggests there could be a situation in which there's very rapid growth of low-income countries, of the lowest income countries in the world, because as there'll be demand from so many high-income countries. But we could also see a situation in which population growth is sufficiently high that that process takes longer. That's an abstract model. It's a macro model. I don't think that should be driving population policies entirely. We need to think about the rights-based approach that people have access and they can make their own decisions. But there are places where access is limited and relatively inexpensive steps. Obviously, a lot of Africa is already going through demographic transition. Certainly, you mentioned Kenya. But there are other places where fertility rates remain very high, and providing better access could make a difference.
Professor Michael Kremer, I cannot thank you enough for taking the time to share your reflections on these really profound questions with us. Thank you so much, Michael.
It was a pleasure. Very much enjoyed talking.
Likewise. Thank you all for joining us. Look forward to seeing you at the next Africa Perspective series event. Thank you so much.